Hello and welcome to the Weekend Investing Daily Bytes. We are shooting this on 28th of March. So just a couple of more days before we end this year, which has been a year to forget. But nonetheless, the markets are still seeking lower ground, although Nifty today was giving some indications that it is tired of going south as of now. So we've got ourselves into this range of 16,800 to 17,200, and in the last about 8 or 9 sessions we have spent in this range. The If you see from a RSI perspective, we are in the oversold region. Every time in the past we've been in this 30 to 40 region, there has been a good probability that some bottom will get made. So we are probably close to some sort of intermediate bounce. Whether that becomes a new leg up or not is yet to be seen, but it does seem like that Nifty is trying to diverge from the rest of the market, which is still falling. So today's heat map for Nifty, you can see banks started to do better. Some banks, Kotak Bank, Axis Bank, State Bank, were still in the negative. Yet HDFC Twins and ICICI Bank, along with the IndusInd Bank, moved up. Autos still reeling under the pressure. Maruti, Tata Motors, Mahindra, Asia Motors, everything is down here in this front. Uh, IT stocks also under pressure. Hindalco doing a bit all right. JSW, Tata Steel also flat. Asian Paints, L&T down a bit. Bharti Airtel losing some ground with Geo coming in with more discounting on Geo Fiber. ONGC losing some ground, PPCL losing some ground, Reliance, ITC, Nestle, Britannia were flat today. Adani Enterprise losing the most at -7%. Post a new newsletter from the Ken raising concerns about Adani Group again. So this is the makeup of the market on the Nifty. Sectoral data, real estate continued to move down, -1.2%. Autos move -1%. IT, metals, infra, consumption stocks. The breadth of the markets continued to move down. Only the banking index was one place where some green was there, and that gives me some hope that usually the banking index leads on the upward direction or even in the downward direction. So banking is usually a leading indicator, and that could be a sign that market may be coming close to a halt on the downside, but of course nothing can be conclusively said. Nifty mid cap still falling, although there was some recovery towards the end. Yet last 5 sessions have seen it go from 3200 to 29,324. So still falling here. Small cap index is where the most damage has happened in the last 3 days. Much lesser than what had happened in December here. When it went from 9,800 to 8,900 in 3 sessions, but we've come down from 8,900 roughly to about 8,500 in 3 sessions, and quite a sharp cut of like this since middle of March, or rather 10th of March. We've fallen quite a bit, almost 7% odd on this front, and this too is definitely oversold, but there could be more to go as a capitulation move, and then some recovery may happen. Bank Nifty, as I said, did not fall today. It remained within the range of the previous day. You can see there are now three nested inside bars, more or less. So a range breakout above 39,800 or 39,250 on the downside could be a bit more violent. It does look like it is still maintaining within this range here, and some propensity to go upwards is visible on the chart. Weekend investing strategies and the indices performance for the day, and also we have for the week, month, 3 months, 12 months, etc. So Nifty losing -0.2%. Nifty next 50 losing a lot of ground, 0.9%, primarily on back of Adani stocks. CNX 200 also losing 0.3% today. India top 10 was flat. Nifty next 50 was NNF 10 was down -1% versus zero point 0.9. So that did well. MI Evergreen was up 0.6%. That also did well. Within the mid and small cap strategies, mid and small cap index lost half a percent. MI20 lost 0.9%. MI50 lost 0.4%. Small cap strategies down 0.8% on small cap index. MI25 down lesser, higher cash right now. MI35 down 0.7%. And in all cap strategies, CNX 500 overall market representing the mid, small, and large caps down 0.4%. ATH and ATH2 gaining ground today. All cap was flat and MI30 was also flat. So this is the makeup for the weekend investing strategies. So some Twitter insights from the day. Uh, so this is the dollar index chart. You can see that the dollar index is making a very nice a head and shoulders pattern. Once it does break through this neckline here near 101, it is going to be very likely that we move to below 100, sorry, below 90 in coming days. So that move can be really sharp once this neckline breaks through, but it is setting up to be that way. And of course, if it does break out above 106, then of course all these bets are off. So from that perspective, the dollar index is weakening, and usually, more often than not, and I'll show you some charts in the next session tomorrow, that when the dollar index is falling, it is a good environment and it's tailwinds for emerging markets and precious metals and so on and so forth. And risk on trade is on the table again once the dollar index starts to fall. So it's so one could track this and look at breakdowns here to really sort of try to time uh, the purchases of your favorite stocks. BSC index was BS sorry BSC stock was on my radar today. I was watching it, and this is how it looks over the last 6 years. Uh, at near 400 rupees now, it is very much very near where it opened or made a high in on its listing day. So somebody who bought it in IPO and has been holding on saw this listing gains, then saw 75% loss in whatever he was holding. Then he saw a 10x gain going from 100 to 1050, and now a 60% drop from there, going from 1000 to 415. So very volatile. The lesson that we want to draw from here is that buy and hold doesn't work forever. You need to have a strategy, how to get in, when to get out, how much to buy, because just see the amount of stress this stock has given you with zero results over 6 years. So I mean, you want to do better than that, and that is the sort of message that one would want to get out of this, that either you have a heart which is so strong where you can take this kind of drawdowns on your holds, and you can time exits, and you can buy the lows, or just holding on for very long periods may or may not work in the world today. Another one was on this dual ETFs of gold ETF and the Nifty ETF. This is a chart which is showing their performance since pre-COVID days, so 1st of January 2020 onwards. So in the last 3 years and 1 quarter, you can see that the performance of both the ETFs is virtually similar, but one ETF has moved around a lot, whereas the other one has just steadily gone up. So if you had a combination of these two, as a 50-50 combination also, it would have given you a very smooth, nice curve going over this period. So that is something that you may want to look at in case you are a passive investor, to look at Nifty and bank and gold ETF as a combo portfolio, which you can rebalance every month on a 50% balance basis. We have done a lot of studies on it. We have been running this for many years as NG 50/50 on the small case platform. I myself own a significant amount of Nifty Bs and Gold Bs, and I just keep my idle money in this strategy, and that generates me double digit returns over a longer period, which is good enough to beat inflation for me. So this is something that I do on the side with the money that is not in the stocks or not going to for other asset allocation. Spotlight for the day is the stock KPIT Tech for me. I think what one needs to see here is that it went up in February when everything else was falling. It did correct from mid February to mid March, and now it is again sitting at a near all time high position. So, this stock, and recently you had great volumes going up. So, this stock is actually telling you that there is some story brewing out, there is something developing in this company, there is some something attractive that is causing liquidity to flow to this stock. Whether it will or it will not, I really cannot say, but as of now it does look like a very strong stock in a weak market, and that makes it imperative that you have this in your watch list. And if you are a discretionary trader, you should look for trade setups in this stock. And if you're a non-discretionary investor doing momentum investing, for instance, this stock would have automatically come into your portfolio and strategies. So this is all I had for today's daily bite. Thank you so much for watching. Please do keep sharing these videos and let us know where we can improve. And we keep getting your comments on YouTube and Telegram channel. Please keep sending them. We love to hear back the feedback and critiques. Most welcome for that as well. So to make this better and to reach out to more people. Thank you. Bye.